Easy EMA Strategy for people with jobs. This video is for educational purposes only and should not be considered financial advice. Here's an easy strategy if you have a job and can't be on the 1-minute and 5-minute charts looking for trades. Stick around until the end for some important tips on how to trade this strategy to get an 81% win rate. Asset and time frame. This strategy uses a 15-minute chart on US oil and lets you set and forget your stop loss and take profit orders. Time slots. All you have to do is pick a time slot to check your chart. Between 3 a.m. and 4 a.m. Eastern Standard Time, 7 a.m. to 9 a.m. Eastern Standard Time, and 10 a.m. to 12 p.m. Eastern Standard Time. You only have to check your trade every 15 minutes. This means time slot 1, you check your trade 4 times. Time slot 2, you check your trade 8 times. Time slot 3, check your trade 8 times. Setting up your chart. Plot the following on your chart: a 4 EMA with a shift of 4, a 200 EMA, a 500 EMA, and a MACD with 3, 10, and 16 settings. Simple entry rules. Check to see if the following criteria were met. Liquidity was taken, there was a break of structure, price retraced back to the 50%, price closed below or above the 4 EMA, depending on the direction of your trade. Exit. Place your stop loss behind the swing low or high or the 4 EMA, whichever is closer. Take profit 1 is 1.5 times your risk. Take profit 2 is the 1.618 fib extension or higher. Risk management. Always make sure you are exercising proper risk management. Only risk 1% of your account per trade. Your take profit should be at least 1.5 times your risk. Your trailing stop is the 4 EMA shift of 4. Sell trades. Here is an example of a sell trade. There was a liquidity grab above this swing high. And when you're looking at swing highs, you have to look at the highest candle that has one candle to the left and one candle to the right that is lower. That is considered a swing high. This candle's wick takes out that swing high. Then there's a break of structure. This happens during the London session. Price retraces back to the 50% and above, and then it crosses the 4 EMA right here. That is technically your entry, but this happened before 7 a.m. So when you check your chart at 7 a.m. and you see this candle, you can enter your trade. And if you entered at the close of this candle, you can see how price moved all the way to the downside. And if you placed your stop loss above the swing high, which is right here, you would have been protected. The next sell trade, there's a liquidity grab during the 7 o'clock to 9 o'clock time slot. Then there is a break of structure that happens during the 9 a.m. time slot. Then you want to look for price to retrace to the 50% and then go above the 4 EMA. And once it does that, you want to wait for price to close below the 4 EMA. That happens here. That is your entry. You will fare better if you place your stop loss above the swing high. But as you see, price did not even test the 4 EMA. and then there's your take profit. Buy trades. This buy trade happens during the New York session, and it happens during the end of the New York session. There was a liquidity grab, a break of structure, then price retraced back to the 50%. Then price crossed the 4 EMA. Your entry happens at the top of this candle. Here, you can place your stop loss below the 4 EMA. Price reached the 1.618 level, and that would be your exit. This buy trade also happened during the New York session. There was a liquidity grab during London, a break of structure, price retraced back to the 50%, then crossed the 4 EMA. Your entry was here, and again, you put your stop loss below the 4 EMA. Price reached the 1.27, and you got 2 times your risk. Here's another buy trade that was a little difficult to go through. The liquidity grab happened during London. There was also a break of structure, and then price retraced back to the 50%. Then the cross above the 4 EMA was a very big candle. You might want to reconsider entering here because you're entering at the 1.27. However, if you do enter, make sure your stop loss is below the 4 EMA, and that protected you when price retraced all the way back. You see, price still did not go below the 4 EMA, and then you reached 1.5 times your risk. Important tips. Draw your Fibonacci retracement from the bodies, not the wicks. Start drawing your Fibonacci from the impulse that created the break of structure. You may want to check price once it reaches the 0 level. It may start to retrace. Watch for the 200 and 500 EMA. If price is close to either, it may retrace after touching it. Don't trade against railroad tracks. Those are 2 large equal candles in opposite directions. Check the previous day's price action to see if the liquidity grab was part of a larger price move. Here are some examples of these rules that prevented bad trades. In this example, there was a liquidity grab that happened during the New York session. Price broke structure and it moved back to the 50%. By waiting for price to cross below the 4 EMA, that prevented you from taking a bad trade. Because as you see, price moved strongly to the upside. In this instance, there was a liquidity grab, price broke structure, and again, once it crossed above the 4 EMA, it did not come back. As you see with this one, there was a liquidity grab, a break of structure, and then price moved above the 4 EMA. And then once we see price close below the 4 EMA, that would be our entry. However, right here, there are railroad tracks, equal large candles moving in opposite directions. The last candle shows a move to the upside. That gives you a sense that there may be a stronger move moving to the upside. So this would not be a good trade to enter. Always backtest and forward test your strategy to see what it looks like in different environments. Then forward test your strategy to see what it looks like in a live environment. It is always a good idea to backtest your strategy 100 times and then to forward test also 100 times. Take notes. Always take notes of details during your backtesting and forward testing. These notes will help you to recognize market fluctuations and fakeouts. This is what helped us to determine some of our important tips. We hope you enjoyed watching our video, and please like and subscribe for more videos like these. If you have a question or comment, please post it in the comment section below. Thanks for watching.